Brought to you by the people who have changed your life for the better, said no one ever, about Sallie Mae. Because from day one, they've screwed every customer they've touched.
What you just heard right there was from a famous talk show host on the radio. Now, he said they screwed every customer they've ever touched. No, can we exaggerate a little bit less, please? But I got this specific DM from someone. I don't know why people are saying such bad things about Sallie Mae. I needed an extra $20,000 in loans for school because federal loans wouldn't cover it. Before school, I could only make about $40,000 in a dead-end job. Now I'm making $62,000 and have a lot of options. I'm worried that I'm missing something about Sallie Mae. Should I be scared? No, you shouldn't be worried about Sallie Mae. You see, the negative voices far outweigh the hundreds of thousands of people that they've actually helped that had a positive experience. In fact, I've been helping people with student loans for the last 8 years. We've helped over 20,000 people that have Sallie Mae loans. I've never heard one of them ever complain saying, man, they completely screwed me. No. Okay. Now, we're going to be talking about Sallie Mae in this video and in this podcast. It's basically a Sallie Mae review. I'm going to be talking about features. With that said, let's jump into it. Now, Sallie Mae, where do they fit into this picture? They're products. That's what they offer. Financial products to help you implement your plan. And I've helped thousands, literally tens of thousands of people use these different types of products. And they love them. So you can't just put one blanket statement about, oh, these products are horrible. They're blood-sucking people, blah, 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 blah. No. And I mean, you're like, oh, don't exaggerate, Joe. Nobody's saying this.
And they're sucking the blood out of the very marrow of your bones.
Two things on this. He's talking about, like, Sallie Mae credit cards there, okay? First of all, when you're in college and you have a secured credit card, there's actually very little risk. In fact, I encourage families that I know to have them for high school students. In fact, my daughter's 7 years old and she already has a credit card. Okay, why is it so important? Well, we live in a society where you need credit in order to potentially buy things like cars and whatnot, and houses and whatnot. Even to rent, you need credit now. So it's essential to build that credit score so you don't get ripped off on those things down the road.
They know. They know they're screwing you. They understand. Overdraft fees and credit card fees are where banks make all their money.
This is completely false. Completely false. They don't make all their money off of overdraft fees. In fact, banks and lenders hate overdraft fees. They hate default. No bank is going to be out there telling you, man, we hope everybody's in default on our loans. And why? Because even though they charge fees on it, they lose a ton of money trying to go out and collect the money back for the risk they took in that person. All right, so first off, you got to understand the history of Sallie Mae. Sallie Mae started in 1972, basically as a government-sponsored entity, okay? And so when they did loans up to 2004, they weren't even a lender. They just serviced the loans for the government, okay? And that was it. And they got a really bad rap in the industry because they were horrible with customer service. Why? There was no competition. They were basically it. And I'll admit, because I took a Sallie Mae loan back out way back in the day around that time period, their customer service was horrible. And so a lot of people are like, oh, well, the loan servicer sucks. Well, in 2004, they switched to a private lender because the government basically got rid of them, okay? First of all, I can't blame them for being a very bad government loan servicer. Why? Well, because 20 years later, the government loan servicers now still freaking suck. Okay, so maybe it's not the servicer's problem. Maybe it's something to do with the way the government's running something. I don't know. Just throwing it out there. Okay, that's number one. Number two, since they are no longer a government-sponsored entity, over the last 19, 20 years, okay, their customer service has gotten a lot better. Why? Because they have to compete with other companies like Earnest and SoFi and Linkey and all these other companies. So where does Sallie Mae get its bad rap then on the internet? Because it used to be customer service, so that's not there anymore. Well, the biggest complaint that I see is about the interest rate. Again, I've already stated this. The interest rates are given to you in the documents. Like, just freedom. Like, it's going to be there, and you don't have to get the loan. And you should always shop rates. Like, when we have our FitBUX members come to us and say, look, I need a private student loan, we go through and help them shop those big companies, the Sallie Mae's, the Linkeys, the College Avs, the Earnests. It's like, shop them, see who gives you the best rate. Here's one of my favorite complaints about Sallie Mae. This was a comment on a post too. I hate Sallie Mae because I graduated and they expected me to repay my student loans. I hate to break it to you, but when you take a loan, you're going to be expected to repay. Now, in the reality of everything, when it comes to the actual interest rate, Sallie Mae is actually very competitive because they are so large. So they're one of the best in terms of interest rates, depending on just a number of different factors. That's why we say shop, right? The other thing, and this is one of the biggest benefits of Sallie Mae on why I even agreed to partner with them and why I like them. They have this thing called a smart option. And why is that so essential? They're the only company I've seen do this. When you go to get a loan with Sallie Mae and you're underwritten, you can take more loans out anytime during that year. And even after that year, if you need more loans, it's very easy to get one because you've already been underwritten by them. Most companies, every time you want a loan, they make you go through the full underwriting process. Why is that so important? Well, because you might start school today. Let's just say you start in the year 2024. And early next year comes along, January 2025, and the United States hits a massive recession, maybe an '08 style thing, maybe COVID like 2020. It's really hard to get credit. Credit underwriting can change. So you could start going through your education, be 2-3 years into it, need another loan, and you can't get it. Not because you changed, but because the economics changed. You're screwed. And that's why a lot of people end up dropping out of school. With Sallie Mae, you don't have to worry about that. That feature is phenomenal. Like I said, I haven't seen any other lenders that have that feature. So what are the disadvantages of Sallie Mae? Well, the big one is that it's not a federal loan. It's a private loan. So it doesn't qualify for things like income-based repayment, which is not that big of a deal because if you have to get a private student loan, none of them qualify for loan forgiveness. So that's not a bad thing versus other private lenders, like private companies. That's just something you should be looking at for your plan. You should always get federal loans before private loans. Private loans are the last resort. So that's not really a bad thing. But also, I'll say this about Sallie Mae, as another benefit. They actually have a lot of different repayment options. Most other lenders don't have those repayment options. This is the repayment, and that's all you're doing. Sallie Mae actually has some pretty decent types of terms that you can choose from. So they give you options. Okay, now the other con that I hear people say about Sallie Mae is, I graduated and I had a 14% interest rate and they wouldn't refinance it. You're right. Sallie Mae doesn't do refinancing of loans. But again, that's not a bad thing. Like if you did your homework, you got a good job, you went to school, you did everything correctly, you're going to qualify to go refinance somewhere else. There's not a problem with that. Okay, Sallie Mae's happy. They made some money while you're in school. It only took them 3 or 4 or 5 years to get the money back. As a lender, they're happy about that. And then you're happy because you got to go through school, get more income than what you probably would have if you didn't go through school, hopefully. And then you're able to turn around and refinance it into a lower rate and everything's good. That's not necessarily a bad thing. Now, here's another quote that I see on Sallie Mae, and this is not just Sallie Mae, it's mortgages and car loans, anytime I see a variable rate loan. Quote, I graduated and they just raised my rates. No, they didn't just raise the rates. Sallie Mae just didn't say one day, hey, let's raise the rate on this person. That's not the way loans work, okay? Loans are tied to an index. And they have to very clearly state what that index is and what the spread is above that index. So when you look at your documents, it's all in there. And every loan has a cap, meaning what's the highest it can go to. So there is no surprise because it's always capped, okay? But if you need to go into private, remember, shop. Sallie Mae is extremely competitive. And if you have one of them, figure out a game plan to pay them off, then you can be like this guy.
But guess what I did? I finished paying Sallie Mae back.